Well, gather round, folks. Our dear old Warren Buffett has been making some mysterious moves in the stock market. But shh, it's a secret. Apparently, he's been buying and selling Berkshire stock like it's a covert operation. Wonder what else he's got up his billionaire sleeves, huh? Stay tuned because we're diving deep into the enigmatic world of Buffett's stock market escapades. Warren Buffett privately traded in stocks that Berkshire Hathaway was buying and selling. This attention-grabbing statement opened a recent report from ProPublica, an investigative journalism outlet. The report sent shockwaves through the business community by calling into question the ethics and integrity of Warren Buffett, the legendary investor and CEO of Berkshire Hathaway. ProPublica's blockbuster report stemmed from confidential IRS records that were leaked to the organization. The fact that confidential tax documents were leaked at all raises its own serious questions about privacy and ethics. However, the content of those documents is what created explosive headlines about the legendary Wall Street tycoon. What specifically did the leaked IRS documents reveal about Warren Buffett's personal investing practices? The confidential IRS records revealed that on 3 separate occasions, Warren Buffett had sold stocks in his personal brokerage account either in the same quarter or right before Berkshire Hathaway bought or sold shares in the same companies. This would seem to clearly violate Buffett's frequent public proclamations that it would be inappropriate for him to trade in stocks that Berkshire trades in due to conflicts of interest. What companies' stocks did Warren Buffett personally trade in close time frame proximity to Berkshire trades? The leaked tax records showed Buffett personal trades in Wells Fargo, Johnson & Johnson, and Walmart in the quarters immediately prior to or aligned with Berkshire activity in those stocks. This included personally selling shares of Wells Fargo before Berkshire bought or sold shares, selling Johnson & Johnson shares in advance of Berkshire trades, and making other similar conveniently timed transactions. For decades, Warren Buffett has been renowned not just for his investing acumen, but also his high ethical standards and integrity. He has often stated that it would be inappropriate for him to trade in any stocks personally that Berkshire Hathaway was trading in. In fact, at Berkshire Hathaway's annual meetings, Buffett has fielded multiple questions about his personal investing policy, and each time he adamantly declared, "I don't buy shares that the company buys." If Buffett felt holding the same stocks personally as Berkshire held was a conflict of interest, why did he have a personal trading account at all? If Buffett truly sought to avoid any conflicts of interest or appearances of improper transactions, the simplest course would be to not have a personal trading account at all. With the vast majority of his net worth tied up in Berkshire Hathaway stock already, there would seem little need for Buffett to be trading stocks speculatively in a personal account. He could track stocks for informational purposes without actually buying them via a dummy paper trading account. So, the very fact that America's favorite investor was actively trading stocks in his own personal account raises questions. If he sincerely wished to remain extra vigilant about conflicts of interest, eliminating a personal trading account would have been the best policy. Short-term profits versus long-term reputation. While Buffett has not offered any explanation for his personal trading account or the transactions detailed in the ProPublica report, one thing is clear. The trades did not meaningfully impact his net worth one way or another. Just how substantial were the dollar profits Warren Buffett generated from these questionable personal trades in stocks like Wells Fargo, Johnson & Johnson, and Walmart? With Buffett currently worth over $100 billion, any profits made off small personal trades in stocks like Wells Fargo or Walmart would have been tiny and insignificant in context of his vast fortune. These trades were almost certainly de minimis in dollar terms and impact to his wealth. However, just because the trades didn't amount to much financially does not mean they are insignificant. In fact, these trades and the hypocritical behavior they suggest could prove enormously damaging to the most valuable asset Buffett has spent decades cultivating: his reputation. Warren Buffett's mythos as one of the wisest, most ethical voices in business has made him one of the most respected and influential public figures alive today. The revelation that, in contradiction to his own stated policies, he personally traded in names like Wells Fargo ahead of Berkshire action seriously undermines his reputation. Rather than the ethical, principled persona the world has long seen Buffett as representing, The leaked documents paint a picture of a man willing to compromise his stated values for meager short-term personal profits in his trading account. This could severely impact public trust in Buffett and, by extension, Berkshire Hathaway. If Buffett's trades didn't meaningfully impact his net worth, why would revelations around them still prove so damaging? While generating little monetary gain, Buffett's revealed hypocrisy around his policy prohibiting trading in names Berkshire owned erodes public trust. After decades serving as the paragon of integrity on Wall Street, admitting to contradicting his own ethical standards severely harms his reputation. This loss of reputation could reduce his influence as a leader in business, finance, and public policy. It also raises questions around what other areas Buffett might be willing to compromise on values for inconsequential personal benefit. If he was ready to break his own trading rules, what else might he do against stated policies? This loss of moral authority undermines confidence in Buffett. Thus far, Warren Buffett has been silent in response to the ProPublica report and revelations around his contradictory personal trading practices. With Buffett known for facing difficult situations head-on, his failure to promptly provide an explanation raises even more questions. In the transcript of the shocked media reaction to the news, one anchor laments, "I wish I had an opportunity to talk to him." This represents the feelings of a public eager to make sense of how the paragon of business virtue could act in such a seemingly hypocritical manner for seemingly such little benefit. What are some possible explanations Warren Buffett could offer around the trades flagged in the ProPublica report? Why has he stayed silent so far? There are several possibilities that could explain the trades that seemingly contradict Buffett's own ethics policies, would mainly include the stocks were legacy holdings bought many years before Berkshire activity. Buffett could argue he purchased names like Johnson & Johnson decades ago and was merely selling old positions. However, this still raises issues around the coincidental timing in close concert with Berkshire trades. Secondly, Buffett could claim the sales were to avoid excess concentration and diversify his holdings as Berkshire already had substantial stakes, but this still indicates a double standard in what level of concentration Buffett abides by personally versus what Berkshire takes on. Next would be, he could suggest there was internal confusion between his personal account and Berkshire's activities. If true, this defense raises its own questions around controls and governance, and the lack of response thus far from Buffett suggests discomfort in trying to reconcile activities that clearly violate previously stated ethical boundaries around personal trading while Berkshire is active in the market. Without a compelling explanation, the trades severely undermine Buffett's hard-earned reputation as a leader of integrity. While the full truths around Warren Buffett's surprising activities remain unclear without further response from him, the episode serves as a stark case study in legacy risk management. Buffett's formidable reputation took decades to cultivate through disciplined adherence to espoused values, communicating transparency around policies, and embodying integrity in leadership. However, that reputation could become severely tarnished virtually overnight by revelations around contradictory actions that undermine the credibility of the narrative he has put forth. What lessons can investors and business leaders take from the damage revelations around Buffett's personal investing practices have caused? Other investors and executives should note that while crisis moments that threaten long-standing reputations may only last hours and days, the reputational damage done if left unaddressed can sometimes prove irreversible. Rather than hoping problematic issues around hypocritical or unethical actions will blow over without response, leaders must tackle them proactively and transparently to the maximum extent possible. Even if financial impacts are insignificant, undermining one's own espoused values has non-monetary consequences. And for Buffett specifically, while Berkshire Hathaway will likely continue on soundly regardless of any reputation damage its leader sustains, Warren Buffett's personal legacy now faces deeper scrutiny. The choices he makes around addressing his compromised reputation in coming days and weeks will prove hugely impactful on how the definitive business biography of Buffett ends up being written. An opportunity for explanations exists, but it is fast shrinking. And there you have it, folks. Warren Buffett and his clandestine stock shuffles. Just another day in the life of the Oracle of Omaha. What's the real story behind his sneaky moves? We might never know. But hey, if you enjoyed this peek into the mysterious world of finance, make sure to hit that like button and subscribe for more mind-boggling market maneuvers. Don't forget to ring that notification bell so you never miss out on the latest billionaire secrets.